We are from Hogwarts. I am Rahman.
I am Nurin Shaida. I am Fatini.
I am Mia.
And I am Halis.
Let's enjoy our video.
Assalamualaikum. Now I want to talk about FOB. FOB is free on board. Free on board is a shipment term used to indicate whether the seller or the buyer is liable for goods that are damaged or destroyed during shipping. FOB shipping point or FOB origin means the buyer is at risk and take ownership of goods once the seller ship the goods. For accounting purpose, the supplier should record a sale at the point of departure from its shipping dock. FOB origin means the purchaser pay the shipping cost from the factory or warehouse and gain ownership of the good as soon as it leaves its point of origin. FOB destination means the seller retains the risk of loss until the good reach to the buyer. Okay, next is for sale discount. Sale discount is a reduction in the price of a product or service that is offered by the seller in exchange for yearly payment by the buyer. A sale discount may be offered when the seller is short of cash, or if it wants to reduce the recorded amount of its receivable outstanding for other reasons. An example of sale discount is for the buyer to take 1% discount in exchange for paying within 10 days of the invoice date rather than the normal 30 days. Okay.
There are 4 advantages of FOB shipping point. The first one is seller will not be responsible for arranging the sea transportation and marine insurance. The second one, seller can recover the merchandise before the merchandise is hauled on the vessel. This may be a good thing if your buyer is defaulting or withdrawing the trade. The third one, seller will not be held responsible for any in-transit loss since the freight is arranged by the buyer. And the last one is seller do not have to hassle to match the shipping documents with the letter of credit. Buyer will do all of it because they issue the letter of credit and they have control over the owner. There are 5 disadvantages of FOB shipping points. The first one is sellers still have to arrange the export permits. The second one is seller cannot recover any loss if the inventory is already on board the vessel. The third one is seller cannot recover the price if the buyer fails to nominate a suitable vessel. The fourth one is sellers still have to transport the inventory from their warehouse until it crosses the rail of the vessel. And the lastly is seller may lose their customer if their customer find another seller who not use FOB shipping point. There are 4 advantages of giving sales discount. The first is free up room in your store. Items that you don't plan on selling anymore may sit in your store for months. By discounting them, you increase the chances they will sell, making room for new product. And the second one is boost your reputation. A business that offers discount to certain group of people, such as the elderly or those enlisted in the military, may improve its reputation. When a business gives discount to people who are in difficult situation or who may have financial troubles, from a lack of income, the business shows it is making an effort to help people. And the third one is meet sales goals. Many businesses have weekly, monthly, quarterly or yearly sales goals. If a business is in danger of missing the goals, offering discount can help the business meet and surpass planned sales figures. And the last but not least is cash discount save money. In addition to more sales, discount may help your business save money if the discount involves payment method. Credit and debit cards result in additional fees to process, meaning that you lose money in comparison to cash transaction. By offering a small discount to customers who pay with cash instead of credit or debit, you help both the customer and your business.
There are three disadvantages of discounts. The first one is it gives the bad perception to your company. The example is if your company is a big company such as Mercedes, and then you give too much discount, people tend to think that your company are in crisis. The second one is it will dropping your price can lead to a price war. If your company is a doing small business, and then you drop your price too much, the big company tend to follow your action, and then for the result you will lose to them as their cost of production are cheaper than you because they produce in the big amount. And the last one, dropping your price will kill your profit margins. For the example is like before you drop your price, you will gain for 40% of profit margins, but when you reduce the price, your profit margin will drop to 30 or 20% only. That's all from me. Thank you.